The past 24 hours in crypto have been nothing short of amazing. We pretty much got everything that we could have expected from the past 24 hours. I mean, just look at this. We had an amazing FOMC meeting. We got a 25 basis point rate cut. We got confirmation that quantitative tightening is ending. And in the same 24 hours, we had an amazing meeting between Trump and President Xi, which was spooking the markets. And we had earnings by some of the biggest companies out there. And out of the earnings, 85% of the companies that are reporting in the S&P are basically above their expectations. So if that's the case, then why the hell is crypto reacting like this? Pretty much every single threat that has been pushing the price of tokens down in the past couple of weeks and months, every single threat that has been blamed for pushing down the price of crypto has basically rectified itself, and not only rectified itself, but pretty much been like better than we could ever have expected. So why then is the Bitcoin price reacting like this? What actually happened at that Trump-Xi meeting? What actually happened at the FOMC last night? That's what we're going to be looking at today. We're going to be looking at why, when we're getting everything that we want, we're still getting a chart that looks something like this. So, big show today, guys. Let's get the show on the road, guys. How frustrating is it that we have all these risks in crypto, and every time that the risk materializes, the market goes down, and then when the risk unmaterializes or dematerializes or settles, then the market doesn't go up. It's like one of the most frustrating phenomena that we're going to go with that's been happening. And I'm going to show you today exactly why it's happening, and I'm going to show you today why you shouldn't get fooled by what's actually going on, because there's something going on under the hood that you need to understand. In fact, not some things going on under the hood that you guys need to understand. So we've got a very big show today. To those guys who were here with us last night, sorry that we couldn't get the trading going, but I mean, I think we still had a very good time today. Today, I'm going to bring you lots of love and lots of alpha. So if you're here, number one, subscribe to the channel. Number two, if you're not already subscribed, if you're not part of the 1.18 million subscribers to the channel, go and subscribe to the other channel as well, because I'm dropping a video later on the other channel about what actually happened at the FOMC last night, which I think is going to be a big video. If you are already subscribed, do me a favor, just smash the like button, because the more energy that you guys bring to the show, the more YouTube eventually lands up circulating the show. And that makes a massive difference. So I see we've got about 100 likes already, but let's see if we can push it up. I'm going to bring you guys, I'm going to break it all down for you guys, right? I think we need to understand what's going on, because at face value, it really couldn't be a better situation, right? We've got the rate cuts that we expected. We have QT confirmed, quantitative tightening confirmed, coming to an end. And this morning, we got news that President Trump and President Xi had an amazing meeting. In fact, Trump actually went as far as to say that if you could rate the meeting out of 10, it was a 12 out of 10. That's how good he says. And the problem is that despite all of this, we are having a situation where the crypto market pretty much looks like it's dying. I mean, it looks like look at this. Bitcoin is now the lowest that it's been in, since for a long time. So what is actually going on here? I think in order to understand what's actually going on, we need to look in depth into each one of the happenings of the last 24 hours. So let's look at in depth the FOMC. Let's look at in depth what really happened at the meeting between President Trump and President Xi. And then let's look again at what happened in the company earnings. And let's try and decipher what it is that the market's scared of, because the market's clearly scared of something, right? Let's start off with the FOMC meeting last night. So at face value, all is good. The Fed said that they first of all, they cut interest rates. So now we're at 3.75 to 400, or 3.75 to 4%. We did have two dissents last night. The first dissent was Miran. Miran is Trump's pick for Powell's replacement. He said that they should have cut by 50 basis points. Schmidt, who's another governor, he said that they shouldn't have cut at all. I must say, this time I actually sit on Schmidt's side. We'll talk about that in a second. On top of that, the Fed is going to stop shrinking its balance sheet in December. That's a month away from tomorrow. A month away from tomorrow, the Fed's going to stop decreasing its balance sheet, which means that what's going to happen is we're going to get more money in the economy. It's going to feel like there's more money in the economy. So why then if that is what Trump did, what Powell did, why then is the market responding the way that it responded? And that's where you have to look at the nuances of what actually happened last night. The first nuance that we need to pay attention to is the nuance around what Powell said about the risk to inflation. He said, risks to inflation are tilted to the upside and risks to unemployment are tilted to the downside. Now, remember that the Fed has a dual mandate. The dual mandate for the Fed is to make sure that inflation doesn't go up and to make sure that unemployment doesn't go up, right? You don't want inflation going up and you don't want unemployment going up. And so the Fed is constantly balancing inflation and unemployment. If it stimulates the economy, inflation goes up and so does employment. If it reduces the economy, then you've got inflation going down and you've got unemployment going down. And that is effectively what the Fed is trying to balance all the time. There is one scenario, which is a very scary scenario, which is what they call stagflation. So what is stagflation? Stagflation is when you are increasing interest rates, right? So when inflation goes to the upside and unemployment is tilted to the downside. So let me show you exactly what Powell actually said.
Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation.
So he says, okay, we're getting higher inflation. He blames the inflation on tariffs, which is what we'll get at. But this is the part that shocked the markets.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation.
Okay, that's when he said a challenging situation. He's basically saying, look, if we reduce, right now, a lot of people are getting unemployed. If we reduce interest rates to stimulate the economy, the problem is inflation is going to go up. Inflation right now is at 3.1%, which is above their expectations. And the problem is that the jobs market is taking an absolute hit. I don't know if you guys have been following all the cuts in the job markets. This is the recent announcement that everyone's talking about. But there's been a whole lot of layoffs in the jobs market. UPS, 48,000 employees, Amazon, 30,000 employees, Intel, 24,000 employees. Just look at this list. And initially, people are saying, well, you know what? This list is a list because of AI. The truth is, though, that I don't really think that this list is all because of AI, because I think that I agree with what 𝗙𝗘𝗏𝗪 is saying here. And he says, if you think that these layoffs are AI, you're delusional. I've been telling you for years that the Fed overcut during 𝗧𝗏, which led to overhiring, then was forced to tighten, which led to bank failures and layoffs. He says AI may lead to a reorganization of the job market, but right now it's a tool to greatly enhance productivity, not replace it. And I think he's 100% right. Powell was also asked last night whether he believed that AI was the reason
This is different in the sense that these companies, the companies that are so highly valued, actually have earnings and stuff like that. So if you go back to the 90s and the .com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been,
So long story short, the first thing that scared the economy was that Powell seems to have lost control. He's now in a position where he's admitting that he's got stagflation. He's admitting that unemployment is going up at the same time as inflation is going up. And that's a situation that the Fed can't fix, unfortunately. Because if they reduce interest rates, which is the only tool that they really have, or put more money into the economy, or create looser conditions, then inflation's going to go up. At the same time, you've got to get the job market stimulated because you've now got a double whammy. You've got AI and you've got a massive double whammy. And so the first thing that really scared the markets was the fact that the Fed seems to have lost control again. The only thing is that to fix this is going to be a big problem, because if they put in more money, there's a problem. If they take out more money, there's also a problem. That is what scared the market. So that's the first thing that scared the markets. Next thing that scared the markets. Why did the markets get spooked? Well, Powell did something very strange. he said that the December rate cut is anything but given, basically, right? I mean, just listen to what he actually said. This is not what the market wanted to hear, because remember, the market was very, very, very set on a December rate cut. Like we've been saying, there's a rate cut in now and there's a rate cut in December. And then Powell came out and said,
so.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it.
He said it's not a foregone conclusion in December that we're going to get a further reduction of rates. Now, you can imagine what that did to the market, right?
If it might not be able for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data, as the reason December is not a foregone conclusion, what other things could be the concern then? Well,
the perspective is of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are.
A step back. That's not what the market wants to hear. The market doesn't want to hear that you're taking a step back from rate cuts, especially when up until yesterday, we had a situation where the rate cuts were almost 95% confirmed. Now, all of a sudden, after the doubts that Powell put into the market, all of a sudden the rates are 71.5% confirmed and 28.5% not confirmed. But I think there's something bigger at play here, because I think what Powell is doing is he's threatening Trump. That there's been this Cold War between Powell and Trump. And I think now Powell's saying to Trump, you better get the government open, because if you don't get the government open, I don't have data. And if I don't have data, I can't cut rates. He's blaming the fact that he doesn't have data to the fact that he cannot cut rates, right? So listen to what he says and listen to the undertone. Don't listen to the words, because a lot of the times in these 4D chess situations, it's actually about the undertone more than it is about the actual words. Now listen to the undertone here.
What we get in the labor area, we get some data in inflation,
we get some data in inflation, and we get some data. That the word "some" means I don't get enough data.
In economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel. We're
not going to have the detailed feel. We may, if we don't have the information, it would be negligent on our side to cut rates. Okay, what is he saying to Trump? He's saying, Trump, you need to get the government open. Surrender to the Democrats. If you don't surrender to the Democrats, then you're not going to open the government. And if you don't open the government, I may not be able to reduce rates, because it would be negligent of me to reduce rates without data. And I agree.
Of things, but I think if there were a significant or a material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's 6 weeks away.
It's 6 weeks away. You've got 6 weeks to open, but it's really hard for me to say what would happen if you guys didn't open the government and I didn't get my information in 6 weeks. You're starting to pick up the undertone. That brings me to the next point that the market may actually be getting scared of. So Powell highlighted yesterday that things are not very good because of the government shutdown. And this government shutdown has been okay, well, it's been a government shutdown. But hold on. Now this is the longest government shutdown that there's ever been. And neither side actually want to come to the negotiating table, right? And so now what you're starting to hear is you're starting to get a much more concerned undertone around the government shutdown. Before, people weren't concerned. And now people are concerned. And now you can see that there's, again, 4D chess and lobbying for people to start negotiating or opening the government. Scott Bessent is leading it for the Republicans. Just have a listen.
It's a global embarrassment what these Democratic senators are doing, keeping the government shut down. I mean, look at the numbers. It's 52-3, 52 Republican senators, 3 Democratic senators have come across the line. So I just think it's an embarrassment. Doesn't affect his ability on the international stage. Now, what it does affect is starting to affect the economy. It's starting to slow down air traffic. And I would urge moderate Democrats to be heroes, come across the aisle like they did in the spring and pass a clean seat.
Don't underestimate the power of what they're using the media for, what they're using Face Nation here for. They're using Face Nation to communicate with each other. It's like almost like a husband and wife who kind of want to resolve things, but don't really want to resolve things. And then they start negotiating via their friends. It's like, I would do this if he did this. And that's really what's going on here, right? Like, listen to how hard
now in the second
he's lobbying here.
Shutdown in U.S. history. When will President Trump meet with Democrats to try to bring this shutdown to a close and get federal workers their paychecks back again, Mr. Secretary?
Well, Chris, I'm going to have to reject the premise of your question. Why does President Trump have to meet with Democrats? Democrats just need to go into the Senate and vote to end the shutdown.
But President Trump has said in the past it's up to the president. 52. He's the president. No, he said that in the past. He said you have to be a leader. The president has to lead. You have to get people into a room. You have to get a deal. When's he going to do that?
Well, he is leading, and there's no deal to do with Chuck Schumer. Chuck Schumer is trading off his polls. What's different than when he passed the clean CR in the spring? It's his polls. You know, the whole country's being held captive to AOC's polls. Well, let's look at the numbers. It's 52-3. 52 Republicans have voted, I believe it's 11 times, to reopen the government. 3 Democrats have. And right here, right now, I would urge moderate Democratic senators to come across the aisle, reopen the government, because I'll tell you, we're starting to eat into muscle here. This is starting to affect travel.
Starting to affect the economy, starting to get quite serious. People are starting to get worried about the fact that there may not be data. No data. I mean, it's all fun and games, but eventually it's going to start costing, and that's what people are worried about. Now, the thing that Republicans are arguing about is they're kind of saying, listen, the Democrats don't want to open the government because, I mean, just listening to the reasons, like, I kind of agree. Like, the Democrats can't really ask for this.
Visual aid here to just remind everybody what the simple facts are. 4 simple facts here. The Democrats are required to open the government. They keep saying Republicans are in charge of government. We aren't. Not in the Senate. 60 votes control the Senate, not a bare majority. And so point number 1, Democrat votes are required to open the government. Point number 2, they refuse to do it. They have now voted 12 times to keep the government closed, and they'll have another chance today or tomorrow, maybe multiple times this week, and we'll see what they do. Now, the third point is very important because they've been trying to confuse the American people. They've tried to say this is a fight about health care or this or that or any other thing, and it's very simple. They put this on paper. They made this their demand in writing in the record of the Senate, and it has not changed. These are just 4 subpoints there under fact number 3, but there's many more. But among the things they're demanding, this is what the Democrats in the Senate are demanding to reopen the government. They want to give $200 billion in health benefits to illegal aliens and non-citizens, paid for by U.S. taxpayers. That is in their proposal. They want billions in wasteful programs to be returned to foreign countries. So we stopped these things. They want to turn it all back on. They're demanding that we do all that to get the government open for hardworking Americans again. They want to give $500 million to left-leaning news organizations. And
so, listen, I agree that they really need to start opening the government right now, and that's something we're going to talk about later in terms of my thesis. All right, let's talk about the third event that happened in the last 24 hours, and that is the meeting between President Trump and President Xi. Now, remember what I said to you guys previously. I said most of the negotiation actually happened a long time before the meeting. Don't be fooled and believe that the president was there to negotiate. 95% of the things that needed to be negotiated were negotiated months in the last couple of months. They were negotiated on the media. We kept hearing about them, etc., etc., etc. The president's now finally met. And look, there was some criticism around the meeting, but it seemed to have been a very, very, very good meeting. I picked up some clips and I picked up some ideas, but I want to give you an idea of the tone. So just before the meeting, Trump ordered an increase in nuclear weapons testing 45 minutes before the meeting. And this is a real tweet. Said, United States has more nuclear weapons than any other country. This was accomplished including a complete update and innovation of existing weapons during my first term, blah, 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 blah. And he was talking about, I've instructed the Department of War to start testing our nuclear weapons on an equal basis. And that process will begin immediately. That's how it started. But then, when they met, as I expected, it was all niceties. It was, people here were calling out, saying, look how President Xi humiliates President Trump with a very cold reception. But just listen to this. You see, you have to pay attention to all the small detail here. Yes, President Xi did leave President Trump waiting. But notice how President Trump stands in front of a Chinese flag to show that he's not intimidated by the Chinese flag.
Mr. President, the President of the People's Republic of China.
Good to meet you. Great pleasure to see you again. Good to see you again. Me too.
And we're going to have a very successful meeting, I have no doubt. But he's a very tough negotiator. That's not good. We know each other well.
We're friends. He's a tough negotiator.
President, do you plan to sign a trade deal today?
Could be. I think we have.
You see, it feels like it's very open. He's a very good negotiator. We're very good friends. I'm here in peace. I want to make peace. It was amazing. And then you can hear that how the two presidents were really warm towards each other. We know that Trump is very much about, he wants the Nobel Peace Prize. He wants to be known as a president of peace. It's part of what he really, really wants to be remembered for and known for. And that's exactly the chord that President Xi struck. He's like, listen.
Mr. President, you care a lot about world peace. And you're very enthusiastic about settling various regional hotspot issues.
What you did in Gaza.
I appreciate your great contribution to the recent conclusion of the Gaza ceasefire agreement. During your visit to Malaysia, you witnessed the signing of the Joint Declaration on Peace along
the... You see, so the tone seemed to have been good. I mean, let's listen to some more things that were said.
For a long time now, if you think about it, the very, very distinguished and respected President of China, and we will be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now. But President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a
Basically, this was the meeting which said, we come in peace, we come in peace.
I always believe that China's development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together. Over the years, I have stated in public many times that China and the United States should be partners and friends. This is what history has taught us and what reality demands. I always believe that China...
So they're both good for each other. They want to do each other. So what actually came out of the meeting? Well, they're going to work together to achieve peace, which is a big thing for Trump. Peace specifically in Ukraine. Trump will visit China in 2026. Xi will visit the United States. Amazing. We're friends. China will begin buying soybeans and resume rare earth exports to the US. The US and China will continue to discuss NVIDIA chip restrictions. Overall, China tariffs were cut from 47 from 57%. Best case scenario. There's pretty much, we couldn't have got a better case scenario, and I agree with President Trump here.
But overall, I guess on the scale of from 0 to 10, with 10 being the best, I would say the meeting was a 12. Okay, I think it was a 12. I think very important.
The meeting was a 12 out of 10, and I agree that
relationship is very, very important.
That for now, this issue of China is resolved. And remember, this issue of China is what's caused market turbulence for a long time. All right, so let's sum this up. We've had amazing earnings from 83% of the S&P companies, all above expectations. We had the rate cuts. We had QT cut. We probably have a rate cut in December. Yes, there's a little bit of a political undertone that's happening with Powell and Trump, and that's been happening for a long time. So why then is the market responding the way that the market responds? And I'll tell you very simply. Because the market doesn't care about fundamental news, right? Markets are not driven by fundamentals. If you want to find a narrative, you can back up any narrative with news. You want me to call the market up now? I'll give you 3 narratives. You want me to call the market down now? I'll give you 3 narratives. Markets aren't driven by fundamentals. Wakey, wake, you rise and shine. Okay? Markets are not driven by fundamentals. Markets move, and then we try and find the fundamentals to back up the move. If it's a move up, we'll back it up with positive fundamentals. And if it's a move down, we'll back it up with negative fundamentals. So what's actually going on here? This market is not being driven by fundamentals. We're in the midst of a correction. And I've said from the beginning that this correction will only resolve when people believe that it's the end of the bull market. And I said this before. I said this correction will only end when we are all convinced that the end of the bull market was on the 6th of October, which is exactly when it was supposed to happen. And at the time, I said that Bitcoin will touch 95 to 98, ETH will touch 3,200, and Solana will touch $145. And that's the process that's happening now. Don't worry about the news. Don't worry about the fundamentals. That's all garbage. We're in the midst of a correction. At the same time, we have technically reached the end of the halving cycle. So, if we are going to have one last push, which is what I think could happen, if we're going to have one last push and have a big alt season, exactly the same as what happened in 2021 and in 2017, then what we need is we need the market to bottom. And bottoming is a process. Bottoming doesn't happen with one candle. And I've said it all along. I'm not changing my thesis. This is a post from 26th of September. It was a month and 4 days ago. And I said at the time, remember, we hadn't had the big liquidation yet. And I said, guys, this correction is only going to end when we are all convinced that this is the end of the bull market. And ever since then, every day, I ask the same question. Is the bull market over yet? And what you're seeing is that more and more people are starting to believe that the bull market's actually over. On the 27th of October, 3 days ago, 63% of people told me, not yet. I ran the same poll today, and only 51% of people believe that the bull market is not over. We need this ratio to change. And as I said to you, the bottoming of this correction is going to be a process. It's going to be a process that is going to fool all the people that think it's the end of the cycle. Because that would have been too obvious. The people that believe it's going to be the end of the cycle are going to be the ones that are fooled here. Because everything is going to make them feel like we're at the end of the cycle. We're going to get to a point where good news doesn't drive the market anymore. We're going to get to a point where people start getting crazy about the chop. We're going to get to a point when news the market doesn't respond to anything. We're going to get to a point where people like 𝗙𝗃, and he may be right. I said this again, I have a lot of respect for 𝗙𝗃, and he may be right. But he keeps thinking that this bull market is over. This bull market is over. This bull market is over. And what I think is going to happen is that I think right now we're in the last correction, or one of the last corrections of the bull market, potentially. And if we are, then what's actually going on here is that this is the bottoming process of a correction. And if we're in the midst of the bottoming process of a correction, what's going to happen is the market's going to fool everyone to start believing that the bull market's over. It may even close below the bull market support band for a couple, or the EMA 21 for a couple of weeks. And then only when we really, really, really believe that this bull market is over, then this market's going to take us to max pain and it's going to squeeze up. And that's when we're going to have an amazing, amazing, amazing run. It's not about noise. It's not about fundamentals. I can justify. You want me to tell you how good the FOMC meeting was? I'll do it. You want to tell you how bad the FOMC meeting was? I'll do it. Because you can find the good and the bad in any situation. Guys, it's not about that. We're in the midst of a correction. And a correction is a process. A bottoming is a process. And we're going through that process now. And because this correction has been so bad, and because the next leg up is going to be so high, we need to shake out all the hands that believe, we need to get out everyone to believe that the bull market's over. And when they do, we're going to get the big final run of the market. That's what's going to happen. Mark my words here. Maybe wrong, but that's my thesis, and I'm sticking to it. And you know what? It's not actually only my thesis. Tomorrow, we have Ben Cowan on the show. I'm going to give you a little taste of what that show is actually about, and then the rest you can kind of watch tomorrow. But I really think that it's worth watching this one. It'll be on tomorrow. Is this the end of the cycle? Is it like, is that it?
I'm leaving. Maybe there still is one final thing for Bitcoin before the cycle's over. A lot of the gains have been concentrated in only a few coins. Right?
Is there a buy level anywhere in sight? I've got a few that I'm holding on to, and I'm holding for like one last bull market.
The overwhelming bull case for dominance starts to become less clear. Maybe they trigger in December, and we're just being impatient. If Bitcoin goes below 100, I'm out.
Is this like, has it finally ended?
The business cycle will come to an end. And then you might start to see the riskier stuff start to outperform the blue chip. I could see you getting one final rally by Ethereum. I will say though, Rand, there's one chart I think I think everyone should be aware of.
Yeah, that chart you'll see in tomorrow's show. I think it's going to turn pretty soon. And if you want some hope here, if you look at this post, it says Bitcoin set to gain up to 12% in the next 7 days. I looked at Bitcoin performance in the week leading up to and after Federal Reserve meetings. Since 2023, Bitcoin's average move after FOMC has been about 1.5 times its move in the prior week, meaning whatever the trend leads in tends to amplify once a decision is out. And effectively, what this move is saying is that generally after the FOMC we go down and then we put in a new higher high. And I believe that that is something that could actually happen. And I think that that's one of the scenarios that you got to be ready for. So that's my thesis, and I'm sticking to it. That's it. That's the thesis. I'm sticking to it. Let me know what you think in the comments. Also, just before I go, two things that I need from you guys. Number one is, I don't know if you saw, but our partners BitFunded have got a new one-step challenge, which makes it so easy to start trading with other people's money. So if you go to BitFunded, which is a prop trading firm, which effectively lets you trade with other people's money, and you go to this page over here, you can actually trade. And if you pass a one-step challenge, then you go into trading with real money and you keep 90% of the profits and they keep 10% of the profits. Like on two steps, it was kind of hard to pass because you had to get like one stage and then another stage. But now there's like a one-stage challenge. Go to bitfunded.com. You can go and trade with other people's money. You can choose a package. 5,000, 10,000, 15,000, 25,000. You can trade a $25,000 account on a one-step challenge for $299. You lose it, you lose $299. You win, you're trading with $25,000. If you're a good trader, well, you can sort that out. Also, when you lose, you don't lose a $25,000 account. You lose $299. That's the first thing. There's a link. Actually, no, just go to bitfunded.com. Next thing is, guys, I'm looking for more researchers. I need 10 more researchers. If you want to join our research team, and be part of the amazing team that helps us buy tokens, understand what the narratives are, make content for the shows. There is a link in the description that you can fill in to become one of our researchers. Now, fill it in. It's got a little bit of a test feel to it. Be honest around the test. And the reason why I say be honest around the test is because the problem is that you're going to have an interview with us. And when you have that interview, if you don't know it, you're just going to feel like a fool. Anyway. Sending you guys much love. I'll see you guys again tomorrow. I hope you enjoyed the show. I hope you love the new studios as much as I love the new studios. We'll see you guys again tomorrow with Ben Cowan. Until then, trade well, my friends.